Welcome back to Halftime Report on CNBC TV 18. Well, let's do one thing. Let's get you a quick update on what's happening in the market right now. We have the market absolutely quiet, but still holding up with gains of now, and in fact, lost all of its gains in the last half an hour. So getting to absolutely flat terrain. But let's also focus on the retail and FMCG space. Deloitte, in its retail and FMCG report, states that the retail sector, is finally seeing a resurgence after COVID-19. In fact, FMCG companies and retailers are looking at major expansion plans as well. To discuss this and demand trends, we're joined by Rajat Wahi, the partner at Deloitte India. Rajat, thanks a lot for joining in. So can you tell us, I mean, of course, you know, your report is pretty exhaustive. You talk about what's happening in online versus the offline business. But I want to know particularly what's happening in Tier 2, Tier 3 and the rural market in terms of retail, because that was a space that got hit the hardest in COVID and it's not really returned to normalcy, also because inflation is pinching pockets quite a bit. Any nuances on what the demand trends there look like?
So I think, firstly, thank you for having me on the show, and good to be here. I think what we are seeing currently is that, because of the K-shaped recovery and the pressure of inflation, the demand in the rural markets was a bit muted, and especially not just rural, but I think lower income, even in urban areas, have seen a muted demand. But I think with a lot of the investments going into the industry, both from a infrastructure projects point of view, what the industry is also doing. I mean, when I talk to a lot of the retailers, FMCG players, all are looking at massive expansion in Tier 2, Tier 3 cities, into the urban areas. Also, just talking to retailers, they're looking to almost double the footprint over the next 3 to 4 years in terms of their reach. A lot of that growth is going to come from Tier 2, Tier 3 cities as well, where they are opening up new stores. So the sense is that, there has been obviously the last 3 to 6 months has been quite challenging from the rural markets, especially because of inflation. But the trend seems to be that everybody is looking to invest while looking at the next growth burst that is expected to come over the next 2 quarters.
Right. Rajat, we'll request you to just hang in there because it's breaking news right now. We do have Ashmit with us on the Zee Indus case. Ashmit, looks like decks are cleared for the merger now.
On the FMCG and retail space with Rajat Wahi of Deloitte. Rajat, you were talking about the rural demand and the fact that it had been sluggish, but you are probably more optimistic on it. Can you give us a sense in terms of whether you had to break up urban and rural growth estimates this year? What would they be?
So I think that if you just look at all the data coming through for the last 2 quarters, looks like the rural while I know if you just go back to pre-19 and pre-COVID, rural demand always, outstripped urban demand 1.5 times versus urban demand. But coming in 2019 end itself, we started to see a slowdown in rural. That obviously got to some extent corrected because there was a lot of migration from urban to rural during 2021. But then we had the reverse migration as urban markets opened up. So rural again sort of saw a big tail off. And I think what's happened is that because of inflationary pressures, because of fuel prices increase, and because of prices of commodities, and also, and I don't think we should just divide it as rural and urban. It's low income, whether it's in urban cities, also in our tier 1 metros, there is an impact on people who are basically low income because it directly has an impact on your discretionary spends. So I think it's not just a rural-urban divide; it's a low-income, higher-income divide where people which have obviously who have higher income have had more staying power, and for the rural customers or for customers with low income, not just the inflation but your interest rates going up has a direct impact on your EMIs. All of that has an impact on the overall consumption. The expectation going forward. Sorry, go ahead.
Go ahead. You said the expectation going forward.
No, I'm just saying that the expectation coming out of this, given the last budget that we had, the sort of focus around big capex spending, especially around transportation, logistics, creating all these hubs. Also, a lot of work around the agricultural sector in terms of creating large large employment through Make in India and various PLI schemes. The expectation is that we are going to start to see a big revival in overall consumption, which will be lower income as well as the higher income as well. And I think that will impact both rural and urban areas. And I think we can already sense that when we talk to our clients, when we look at their growth plans for the next 12 to 18 months or 24 months, very, very aggressive. Everybody's looking to expand capacity, expand distribution, expand coverage. So all of that is basically a good, strong sign that we are going to hopefully start to see a good revival from the next quarter onwards.
Right. Just out of curiosity, who do your clients be? Are these the incumbent large players, or are these the new age D2C companies?
No, I think it's across the board. I think my sense is that it's the incumbent, the large players who are going to be the largest beneficiaries of a lot of the growth. I think the D2C brands who have sort of launched over the last 12 to 18 months may find some headwinds because of because of issues around the next round of funding and support, etc. And they are looking to also figure out how do they expand now from the modern trade and e-commerce into the GT or general trade, because that's where a lot of the tier 2, tier 3 expansion will come from.
No, the reason why I asked you that is, do we really have that kind of appetite in our markets to actually have consistent average order values upwards of 1,000 with growing number of orders? There are higher acquisition costs via the D2C model and online customer acquisition. And there is funding winter for the new players too. So amidst all of this, where does the future lie?
So I think you're right. I think on the side of the as far as for funding is concerned, there is a bit of a challenge because of the overall global economic situation and the drying up of that. And that's why I said that D2C players, new players or players who are just launching or who have launched over the last, say, year and a half, will find it a bit more difficult to grow because their next round of support may not be there. And I think that's why we are seeing a lot of the established players, the likes of the ITCs, Maricos, Britannias, looking at acquisitions of various D2C players to help them to do the next, or not just acquisitions, but partnerships, maybe even investing into the various D2C brands to help them, in the next growth phase. Because remember that India, whatever we talk about in terms of e-commerce, modern trade and general trade, 85 or 86% of Indians still shop in the general trade, mom and pop stores. E-commerce accounts for only 4 or 5% of FMCG, and modern trade between 8 and 10%. So majority of the expansion, if you go to the next stage beyond the first two channels, is to go to the general trade, which means you have to set up distribution networks. How do you do that? So all of that requires a lot of funding, and this is where I think that some of the D2C players may find it very more difficult to grow versus the established players there.
Okay, all right, we'll leave it at that. Thanks a lot, Rajat. Very helpful actually to understand what's happening both in terms of the retail channel as well as, in the rural market, which was under quite a bit of pressure. Let's slip into a quick break. On the other side, our commodities segment, Manisha Gupta joins in. She has with her Peter Maguire, the CEO of XM Australia. Stay tuned.